Does timing matter? And I'm going to say yes. And I'm going to say yes for a couple of reasons. There's obviously the impact of those dates that we just went through, but there's also some licensing and migration entitlements that you should be interested in. So I'm going to spend the majority of this part of the presentation talking about a really exciting topic, licensing. But before I start, I want to say there's a couple of caveats. I am not going to consider anyone who's got licenses for CRM or Dynamics 365 CE as well as F&O. I'm going to look at this as F&O and AX just in isolation. Okay. So we talked about mainstream support ending 2021. And I want to share this. It's like a sample project plan working backwards. And I've got a key date in there. And I'll talk to you about why that date is important shortly. But what I've given you is sort of like, all right, I want to be live before mainstream support ends. I should be we should go live at least 6 months before that. But there is a big licensing date, October 12th, 2019, that we want to talk about. Now, if your project's going to take, 18 months, 12 to 18 months, you really do want to start your project around October 2019. If you want longer to do it, obviously you're going to have to start thinking about that now. Now, when should you have been preparing your budget and business case? I would have suggested that was back in 2018 and hoping that you have got it approved and ready to go for 2019. All right, what's important about that? Actually, I'll just take a slice back for a minute. So why are we saying to migrate your licenses on or before 10, 12, 19? So currently, at time of recording, Microsoft have on offer a 40% discount on the subscription annuity for existing customers migrating from AX, NAV, and GP to Dynamics 365 F&O. That 40% will be available for people who are on an EA as well as a CSP, and I'm going to talk about licensing mechanisms in a minute. But what you should know is that if you are looking at upgrading, there is a date, October 12th, 2019, at which that discount will disappear. Again, 40% discount off the retail or listed price of the subscription for Dynamics 365 F&O. All right, so yes, timing matters because you may very much want to access that discount, particularly if you've got a 3-year EA and you want to lock that 40% in for your next 3 to 5 years. Okay, so before we go any deeper into licensing, I just want to spend a little bit of time giving you some definitions. This is what makes licensing hard too, is we have this special list of acronyms. So what the licensing migration is going to mean to you is going to be different depending on how you transacted your purchase of AX in the first place. An EA is a volume purchasing agreement. It's for organizations these days need to over 500 desktops. And, generally they're 500 desktops running Office, Windows, etc. Now, AX used to be able to be purchased on the EA from 2012. 2009 was not available on an EA. So the EA provides you the ability to track directly transact directly with Microsoft, and it's usually handled by a licensing solution partner, LSP. They used to be called a large account reseller, a LAR. And someone like Dell or CDW, you would have got an invoice for them for your Microsoft software. Those agreements can be between 3 and 5 years. Now, the server cloud enrollment is an EA addendum that has been in the past provided to customers who have already got an EA and want to separate out their cloud-based applications. And along with that agreement, I believe you have to have some minimum level of Azure consumption. So an EA organization, someone who's bought their AX on an EA, will be paying some level of software assurance, and that's an annual fee. The way that the EA calculates it, it's about 25% of the value of the installed licenses, 25%. But the most impactful thing about being on an EA on 2012 is upgrading. You need to, firstly, do you want to put Dynamics 365 on the EA? And two, where are you in your 3-year term? If your 3-year term finishes on, let's say, August, you will access that 40% discount. If your EA 3-year term ends 2 weeks after that October date, you may want to consider renewing your EA early so that you will have access to that 40%. The Dynamics price list. So if you didn't buy using that volume agreement mechanism with Microsoft, you will have probably bought on something that used to be called the Dynamics price list. And that's when you paid the partner that you bought it off, and you continue to pay BREP, which is that 16% per annum that you're paying to keep your system current. So that's what a DPL is, and BREP is the annuity related to DPL. So CSP, for those of you who are on AX, probably may not be familiar with it. It's a new licensing mechanism for Microsoft Cloud Services. You can buy Dynamics or Office or much of the Microsoft stack through a CSP agreement. Now, there are two types of CSP partner. There are CSP direct and a CSP indirect. Direct partners have a higher volume threshold to meet, and they transact directly with Microsoft. So Sikich, for example, is a direct CSP partner. You may have a partner that is a CSP indirect. They don't meet the volume requirements, and they will be working in the background as a indirect. They will be associated with a direct CSP partner. So these things are important because how you upgrade your license will very much depend on how you bought it in the first place. So some things you have to think through. One, what version are you on? Two, did you buy on the EA or the DPL? I am assuming everyone who's listening has kept their maintenance current. The 40% discount does not apply to anyone who is not current on their maintenance. How you buy your new licenses, do you have a choice? Is there different ways that you could buy your new licenses? And timing, when does your EA or your Dynamics price list renew? So I'm going to walk through each of those. So what version are you on? If you're on AX 2009, it was never on the EA in the first place. So you'll have acquired your license through the DPL. So when I talk about timing your migration, keep in mind that you will be a DPL client. Now, you may wish to buy your D365 licenses on your EA if you have one now. This goes for 2012 customers as well. Or you may want to buy them on CSP. Now, the strengths and weaknesses of the, or drawbacks of the two buying methods is really beyond the scope of this call. But don't assume just because you've got an EA, it's the best way to buy it. Conversely, just because you've had a DPL license, don't assume CSP is necessarily the best way to buy it. There's a really great decision-making tree, I think, on YouTube that can help walk you through what the best purchasing mechanism is. And there are good reasons why you might choose one over the other. All right, so Dynamics 2009 licenses were for concurrent users. So what you really have to do is you have to move your licenses from concurrent to named. And that can be a little bit of a heavy lifting exercise to work out exactly what you need for your new licenses, because there are new categories: full users, activity, and team users. So you'll need to go through those through your the people who are actually using the system and try and work out which of those three categories of users they will need to migrate to. So it's quite hard to get it right, and certainly we've got license translation spreadsheets that can help you determine what sort of users you've got. If you're on 2009, we do recommend a number of simple steps. Identify every user in the system, take the licensing guide and assign the likely role designation for each of those users to the name, and then that role in the licensing guide is then tied to a particular license type. So the good news, though, is that there is no migration formula or rules if you're running 2009 concurrent going through to D365. Microsoft's been great here. They've said just subscribe for the number you need. We will give you that 40% discount and honor that on the equivalent numbers that you're bringing over. So there's really no benefit to migrating users that you don't need, because you're going to be having to pay for them per user per month. So for 2012, our 2012 clients who've got 2012 licenses, there's a pretty close correlation between the 3 tiers of user types. 2012 had enterprise users, we now have full. 2012 had functional, and we now have activity. And the task and team users are similar, but do know that the team users in D365 are pretty special now. They can provide read access to the system, which of course under 2012 we never had that option. The team users also work incidentally across finance and operations and customer engagement, which is CRM. So how does how you originally bought your licenses matter? This is really simply it. If your licenses are DPL, you'll be on a 1-year renewal cycle. If your licenses are EA, you're on a 3-year or maybe even 5-year renewal cycle. So the general rule of thumb is, if you migrate your licenses mid-term, it will necessitate keeping your software assurance or BREP going, and you'll end up paying more. Not much more, but still more. And the last point I'd like to make is any maintenance or BREP or software assurance you've already paid for is a sunk cost. There's no credits back for that. So thinking about timing, if you've got time to run on your agreement, either if it's DPL and you're paying 16% or it's your EA, we place your order using a SKU on the Microsoft price list that will take that into account. It's called an add-on SKU. So it's basically a top-up of your annuity. You know, you've got BREP or you've got SA running. This tops it up. So with the add-on SKU, you pay a subscription and keep paying your annuities. So you can carry on paying like that forever. Microsoft haven't announced that that program is going to end. Or when your next maintenance is up for renewal, when you choose to, you can migrate to the from SA SKU. So again, 2 different sorts of SKUs. There is the add-on SKU, which is a top up to your existing annual or 3-yearly contract. And there is a from SA SKU that you do at the end of your contract. You stop paying BREP, you stop paying software assurance, and you just start paying that subscription. And again, that subscription up until 12th of October is a 40% discount. So the from SA SKU is available to the end of your maintenance period and assumes you've stopped paying your maintenance and you'll only pay your subscription. The timing needs to be spot on, as you really only use that SKU when your maintenance is current, and the most logical thing is to swap the SKU immediately before your annuity lapses. So think about this way: if you're let's say you're on DPL, your annuity is in August, you're going to want to swap to, you want to take advantage of the 40% discount. What do? If you renew on 1st of September, you'll pay a whole 12 months. No one's going to refund you, but you will have to go to the subscription model before 10/12. So you've sunk a lot of money that you didn't need to. It's probably more cost positive to, prior to that August renewal, you then swap over using the from SA SKU, access the 40% discount, and get those extra couple of months on subscription rather than your BREP. Couple of things to know. You only get the 40% off on the equivalent number of cows. So if you're currently in 2012 and you've got, 200 enterprise cows, you'll only get the 40% on 200 full licenses in D365. Dual rights. So something useful to know means that Microsoft do include in the licensing your ability to stay on 2012 as you implement. I would refer everyone to the transition guide. It's online, and it does talk you through all of this, including the discounts, I believe. And the licensing rules for on-prem and retail are different than standard Dynamics AX. So I would suggest you check the transition guide when you're looking at them.